Hello everyone. Let's break down the numbers for Tata Consultancy Service Limited over the past few quarters and see what they mean for the business. Starting in June 2024, TCS recorded a sales figure of 62,613 crore. By June 2025, their sales reached 63,437 crore. That is an increase of only 824 crore or about 1.32% compared to the same quarter last year. But if you look at the previous year from June 2023 to June 2024, the company sales grew by 3,232 crore, which is around 5.44%. The growth pace seems to be slowing down as time goes by. And moving on to expenses for TCS in June 2024 were 45,951 crore. This climbed to 46,562 crore by June 2025. That is an increase of 611 crore or about 1.33% more expenses than the previous year. Employee costs remain a major chunk, making up about 59% of total expenses. And the operating profit in June 2024 was 16,662 crore compared to 16,875 crore in June 2025. That is a gain of 213 crore or 1.28% rise. The operating profit margin stayed fairly steady at 27%, which means for every 100 rupees earned, 27 rupees remains as operating profit. And other income stood at 962 crore in June 2024, rising to 1660 crore in June 2025. That is a notable jump of 698 crore or about 72.6%. Exceptional items were zero, so nothing unusual affected profits. And profit before tax was 16,979 crore in June 2025, up from 16,231 crore in June 2024. And tax rates have remained steady at 25 to 26%. In June 2024, net profit was 12,105 crore. On a year later, in June 2025, net profit has risen to 12,819 crore. That is an improvement of 714 crore. The year-on-year net profit growth for June 2025 is 5.9%, showing that profits are rising a little faster than sales. And earnings per share for June 2024 were 33.28 rupees, reaching 35.27 by June 2025. That is an increase of 0.9 rupees, about 2.6%. That is an increase of 1.99 rupees. So shareholders are getting better returns. But the pace is slowing down. Sales are not jumping as much as before, but profits are rising a bit faster. Their costs are under control and margins remain steady, which is a good sign for stability. The company doesn't have much debt and it's giving solid returns to its shareholders. So in short term, TCS may face challenges in the near term due to weak global IT spending and slower project ramp-ups. Revenue growth is muted, but profits remain stable thanks to cost control and strong margins. And in long term, as digital transformation demand picks up again, TCS should benefit from its strong client relationships and scale. So whenever you look at TCS performance, remember the small percentage changes show that even if numbers don't shoot up every year, staying steady and reliable is a winning move for long-term success. So what do you think? Can TCS return to double-digit revenue growth while maintaining its industry-leading margins? Let me know in the comments.